Hello, my name is Joseph Loofborough,
And my name is Lisana Minoribai.
and we are the founders of Level Investments Incorporated. Level is the first investment platform that allows everyday people like you and me to invest in all the major asset classes that make up the portfolios of the ultra high net worth individuals.
We are here to raise up to $2 million of pre-seed capital from investors like you.
So, what is the problem that Level is seeking to solve? The American investment landscape currently has two doors, one for everyday investors or retail investors, and another for accredited investors. If you go into the retail investor's door, you will see that you can invest your money into publicly traded companies like Apple or Microsoft, into bonds and cryptocurrencies. Not too bad. But what about the other door? What investments exist behind the door for accredited investors?
When we open the accredited investors door, we get access to invest in even more asset classes like venture capital and privately owned companies, private credit and private debt, alternative assets like fine art, wine, whiskey and spirits, and real estate.
Now, I know what you are thinking. What in the world is an accredited investor? Following the stock market crash of 1929, the government started to impose stricter regulations on the markets. The intentions were good, and the thinking went that wealthier investors must be more sophisticated. If you are wealthy, the government will trust you to make your own investments, assuming that even if an investment went completely bust, you will still have enough wealth to recover and not be forced to rely on government subsidies to survive.
So, how do you know if you are an accredited investor?
It's easy. If you aren't sure if you are accredited, then chances are you probably aren't. To be accredited, you need to have a net worth of over $1 million, not including the value of your primary residence. You can also become an accredited investor if your income has exceeded $200,000 a year if you are single, or $300,000 a year for a married couple. As it stands, only a little over 10% of all Americans meet the requirements to be accredited investors.
This means that nearly 90% of Americans are forced out of investing in these alternative asset classes.
At least they used to be. Level has created the only investment platform that allows everyday retail investors to invest in all of the asset classes that ultra high net worth individuals invest in. All right, so you're probably wondering, how does it work? Level is going to establish a series of interval funds for our users to invest in. Interval funds are a unique type of investment vehicle that combines features of both closed-end and open-end funds. Our funds will be classified as closed-end funds, meaning shares in the funds are offered continuously, allowing investors to redeem shares at specified intervals. One of the main features of interval funds is this periodic liquidity. But the even bigger advantage of interval funds is that there's no accreditation requirements. This is the legal structure that was pioneered by Sweater Ventures with the release of their Cashmere Fund, a venture capital focused interval fund. Our first fund is going to be our growth fund, which is going to target venture capital and privately held companies with a high growth potential. Once the growth fund has been successfully funded and launched, Level will begin to launch our remaining funds, the public fund, the alts fund, the real estate fund, and the income fund, each targeting a different asset class and investment objective.
As Level users invest their money into Level's funds of their choice, we deploy that capital to source, procure, and ultimately exit assets that fit under the investment objectives of that Level fund. Level aims to invest in companies and assets that should produce market-beating returns. As the valuations of the fund's assets change, or as the fund receives proceeds from prior exits, the returns are delivered to Level invest in the form of a share price increase or a higher net asset value.
To get started, users just need to download the Level app, verify their identity, and connect their banking information, and then you just simply slide the bar representing which Level fund you'd like to invest in left or right to set the percentage of your Level portfolio that will be invested in each fund. For example, when we look at this user's profile, we can see that for every $100 Jane deposits into her Level account, $29 will go to the growth fund, with the remaining $71 being allocated as shown on the screen.
What is the Level's market potential? Well, currently there are $22 trillion of alternative assets under management. That amount is expected to grow at 8% annually until the value of alternative assets under management grows to $24.5 trillion in 2028. We believe that this market offers immense growth opportunities for Level, as nearly 90% of American investors have been effectively locked out from investing in these asset classes.
So who is Level's target market? The investors that have historically been relegated to investing at the kids' table are Level's target market, specifically investors under 40 years old with a high level of financial literacy and at least some college education, if not an advanced degree. These are likely working professionals with some savings and disposable income that they would like to invest. So how exactly do we meet our target market's needs?
We meet market needs by giving non-accredited investors access to top-tier investment options previously reserved for the wealthy. Our platform offers customizable portfolios, transparency, and innovative investment choices by making investing more accessible and tailored to individual needs.
We believe that Level is currently the only investment platform that provides retail investors with access to these assets, diversification beyond the market, and wealth generation opportunities, all in an easy to use mobile app with transparent pricing.
So who are we?
We are Level's co-founders. We are both graduates of Quantic School of Business and Technology's MBA program, and together we bring with us years of legal, business, financial, marketing, and investment experience that will help us power Level to be a main player in the retail investment space. Now, how does Level make money? Level generates revenue through management fees and performance fees. We charge an annual management fee of 1.5% on assets under management, or 1% for our early founders. Additionally, we earn a performance fee of 10% on profits that exceed a 5% hurdle rate, which favors investors significantly more than the traditional 2 and 20 fee structure of private equity and hedge funds.
This structure keeps our interests aligned with our investors, focusing on delivering strong returns.
So what is our marketing plan?
We are planning to implement a comprehensive marketing strategy to reach non-accredited investors. We will use a user-friendly app and website supported by targeted social media, Google Ads, and influencer partnerships.
Our market penetration pricing strategy will start with a competitive 1.5% management fee, or 1% for our early investors, scaling up to 2% by year 4, with performance fees that align our success with our investors.
All our important strategic partnerships and a well-developed referral program will drive growth, making Level the go-to platform for diversified, high-performing investment opportunities.
So what are our financial projections?
As we can see, Level is on track for significant growth, with projected revenues reaching 1.8 million by year 3. Our financial plan forecasts an initial operating loss of 600,000 in year 1 as we build our foundation. However, by year 2, we anticipate turning a profit with a net income of 215,000, growing to 590,000 by year 3.
Our strategy includes capturing 1% of our target market by year 2 and scaling to 3% by year 4. With a competitive management fee structure and a performance fee aligned with investor success, we expect to achieve a 36.1% operating margin by year 3. We plan to break even in year 2 with $1.125 million in revenue, requiring approximately 15,000 clients.
We believe that this solid financial foundation will set Level up for sustainable long-term growth.
So how exactly do you make money as our investors?
Well, our exit strategy for Level focuses on maximizing investor returns through strategic opportunities. As we scale and achieve our market goals, potential exits include acquisition by a larger fintech firm or an initial public offering, IPO. These pathways provide liquidity and strong returns, ensuring that our investors benefit from Level's growth and success.
Any questions? What references did we use? And now we will show our IDs for the camera. Here we go. Here we go. I think that's it. Thank you very much for attending.